As of the week ending February 22nd, financial markets displayed a mix of volatility and cautious optimism. U.S. equities saw modest gains, particularly in the technology sector, with AI stocks contributing to growth in the S&P 500 and Nasdaq. Despite these gains, concerns over inflation and the Federal Reserve's future interest rate decisions kept investors on edge. Consumer sentiment declined, and inflation expectations rose, adding pressure on market sentiment. Bond markets faced challenges as yields continued to rise, reflecting uncertainty about the timing of potential rate cuts. The 10-year Treasury yield climbed, signaling investor apprehension regarding prolonged high interest rates. In commodity markets, oil prices stabilized after recent volatility, supported by supply constraints and geopolitical tensions, particularly in the Middle East and Russia-Ukraine. Gold prices remained steady, continuing their positive trend for the 8th consecutive week. Globally, European markets were influenced by weaker than expected economic data, particularly in Germany. This raised concerns about a potential recession in the region. The regional benchmark STOXX 600 ended slightly higher, though uncertainty surrounding Europe's economic outlook persisted. In Asia, Chinese markets showed slight rebounds following government measures aimed at stabilizing the economy. However, investor confidence remained fragile due to ongoing concerns about China's recovery. Geopolitical developments also shaped market sentiment. Early signs suggested that the Russia-Ukraine conflict may be nearing an end, leading to some optimism in the markets. However, uncertainties around the conflict and other global tensions remained a concern for investors. Trade policies in the US and Europe also contributed to market fluctuations, with moves to reduce global dependencies on certain economies driving shifts in market behaviors. The outlook for markets in the near term is highly dependent on the actions of central banks, particularly in the US and Europe. Investors are closely watching any hints of monetary tightening or loosening, which will have significant implications for the bond and equity markets. Additionally, inflationary pressures and economic growth prospects will remain key focal points for market participants, as they evaluate whether recent data signals recovery or persistent challenges in the global economy. Amid these challenges, some sectors continue to show resilience. The technology sector, particularly companies involved in artificial intelligence and automation, is gaining momentum, reflecting long-term growth potential despite short-term volatility. Similarly, energy stocks are benefiting from higher oil prices and supply constraints. Overall, financial markets are in a wait-and-see mode, with investors closely monitoring central bank policies, economic indicators, and geopolitical developments for clearer direction in the coming weeks.